Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 7th of January 2024, and yesterday we published our regular weekly financial update. For some strange reason, hardly anyone has looked at it, so we're republishing it again today under a different thumbnail and header. Gold and silver prices fell last week, so did equity markets, but ever so slightly. The dollar, however, strengthened. What's going on? Let's take a look. Okay, before we look at the figures, just a quick reminder, we have set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comments section below for those who've not as yet joined that channel. And we are getting, at last, some good levels of subscribers and viewers on that channel. Now, gold fell $17 last week, falling from 2062 to 2045, having been as high as 2079 and as low as 2025, an overall fall for the week of 0.8%. In sterling terms, gold was down £12 at 1,609, and in euros it closed at 1,870 euros. That's down just €1. For those who follow this channel, you'll be aware we are interested in buying more gold, but we were hoping to see it fall below £1,500 before we did so. It's £100 too high. Whether it'll get down to 1,500 is another matter. Silver fell 60 cents, falling from $23.80 to $23.20, having been as high as $24.11 and as low as $22.70, a fall of 2.5%. Both gold and silver, in US dollar terms, reached lower highs and lower lows than the previous week. But that said, it's only next week, or this coming week, when most traders are back in work, and we will obtain a better guide as to trading levels. In sterling terms, silver closed at £18.27, that's down 48 pence, and in euros it closed down 0.36 euros at 21.25 euros. The gold to silver ratio rose from 86.7 to 1 to 88.2 to 1. Looking at cryptocurrencies, Bitcoin currently stands at $43,725. That's up $1,482 on the week, though it has earlier in the week been above $45,000. Equities were marginally down in spite of rising on Friday. Dow Jones closed down 223 points at 37,466. The S&P down 72 points at 4,697. The Nasdaq took a bit more of a hit, down 487 points at 14,524. And the FTSE index down 44 points at 7,689. Oils were higher. Brent crude up $1.72 at 78.76, and WTI crude up $2.16 at 73.81. OPEC and OPEC Plus are just determined not to allow the oil price to fall below this $70 level. The dollar index was up 1.08 points on the week at 102.41, and we'll mention why in just a few moments. Last week we predicted that gold would trade between $2,025 and $2,100, which it did, and silver would trade between $23 and $24.50, but we did have an outlier range of $22.50 to $25. Well, silver closed within our normal trading range of $23 to $24.50, but for a short time entered into our outlier range to the downside. Now, we stated last weekend that there was a reasonable amount of economic data to deal with this coming week, which was just passed, with Friday's employment report being the most important day. Well, both manufacturing and services PMIs were mixed, but the ADP employment report reported 34,000 higher or more jobs than expected. This was also reflected in Friday's non-farm payrolls, now called the US Employment Report, with the announcement of 216,000 new jobs compared with expectations of just 170,000. You see, the US economy is still running strong, And the effect of the employment report is that rates are likely to remain higher than some analysts were predicting. They were anticipating a fall perhaps as early as March. Now that could still occur, but much really depends upon this coming week's CPI data, which will be announced on Thursday. Markets are expecting year-over-year core CPI to fall from 4% to 3.8%. And it will be most interesting and market moving if these CPI figures deviate in either direction from what is expected. Now, we also have consumer credit figures for November being announced on Monday and PPI figures for December on Friday, but it's the CPI figures which will potentially have most influence this coming week. So what is happening in reality to gold and silver? Well, for sure, the strengthening dollar this week did not help either. And also, as we've mentioned many times before, we will only see significant rises in these precious metals when the map for interest rate declines become more obvious. Gold could very well fall back towards $2,000 before it spurts upwards, and silver could touch $21 again. Now, our view is that gold probably has an absolute floor of $1,900 and silver $19. We would be surprised to see either of these fall to these levels in 2024, unless the economy enters into recession, whereupon silver could be hurt further. But that's our most pessimistic view. If inflation appears combated and no recession occurs, we could easily see gold surpass $2,100 and then $2,200 by March end, and silver $25 and then $26. Geopolitically, things are not great, but the US has its presidential election at the end of this year, as does the UK have its general election. And we can certainly see policymakers both sides of the pond announcing various giveaways and doing their utmost to reduce interest rates. So what do we predict for this coming week? Well, traders are back in harness and will want to see the CPI figures after this strong jobs report before gaining a sense of direction. Therefore, we expect to see gold this week trade somewhere between $2,000 and $2,100, with $1,975 to $2,125 as outliers, though we would be surprised if it moves into outlier territory. Silver, we forecast to trade between $22 and $24.50, with $21.50 to $25 as outliers. Again, we're more likely to see silver trade towards the lower end of that range as far as our estimates are concerned. What do you think? Please do share your thoughts. Meanwhile, we'd appreciate it if you'd give this video a thumbs up, subscribe and press the bell sign. Pop on over to Finances Do Matter. Do make sure you've subscribed over there. And meanwhile, and as always, we wish you a safe, enjoyable weekend. And now the traders are back. A prosperous week ahead.